Welcome to tonight's community class. Tonight we have on deck Mr. Joseph Pfeiffer. Pfizer.
Yeah,
Fisher? How do
Pfister.
you say your name?
Pfister.
Fisher?
Yeah, just
Fister.
like Pfister faucets or Price Pfister. The P is silent.
Well, thank you. I didn't want to butcher it, but I did anyways.
There are
So
no royalties.
So I'm kind of excited to see what Joseph has to say tonight. I may bounce in and out of camera here in a minute, just because like I said, I have some construction, but I'll be listening no matter what. But Joseph, we all love what you do when you do what you do. I know that you do it. The thing that I know about Joseph, that if he's going to present something, he's going to be confident in what he's going to present. He doesn't go off the cuff. He doesn't make wild accusations. He back tests. He digs deep. He may go a little bit too deep that we might not be able to understand him, but but you can rest assured that he's speaking from a place of knowledge. And so I love that about Joseph. And a lot of times I have to watch and rewatch and watch again so that I make sure that I get everything that he goes over. So, but love it. So, and Glenn says you've been looking forward to the big Joseph show for a couple of weeks now. So don't disappoint, Joseph. The bar's been raised.
All right. So should I share my screen here?
Yeah, absolutely. Let's get started. Let's do it.
All right. Well, a couple of months ago, I was talking to a friend of mine that he had been talking to a former instructor that used to be with the apiary, and at that time we went over some things, sentiment stuff with the commitment of traders report, and I had at that time set up some tracking systems in Excel on a commitment of traders, and so we got to talking. I called him, and he called me back. He wasn't there at the time, but he called me back, and we talked for a few moments. And then I thought, I'll just go back and take another look and see what the commitment of traders report would present for me now. That's been almost a year or two since I've did some tracking. And so that's what got this started.
Sure.
I did. I went and it was just kind of off the cuff. It's sort of discovery out of a curiosity. For those who don't know me, I'll do a little brief on my background. I'm a retired engineer. I've worked in heavy cranes and davits and control systems after having a few years as a contractor on the river. So I've been around. I went through a lot of quality control statistics and project management classes, and that's what got me started into this direction, and why I wanted to get involved with trading Forex, because I saw it as an opportunity to use the skills that I'd learned just before I retired in statistical analysis. So with that, what I've developed here is a view of the market based on certain criteria that are reported within the market. And my thought on that is, predictions are great until they meet the unexpected. And I think you see that every day in our hot seat programs that David teaches, and he teaches us how to see forward in the market. But it's not a really a clear path. It's a probability path. And some things and some positions are more likely than others, given the way that price has developed. And so this is a part of that, but it's at a longer term basis. And the term on the basis is that it's a look at the next week, given the information provided for that model. So what we'll be learning today is how the models are constructed. What are they based on? We'll go over a brief history of how the Commitment of Traders report got started. I'll show you the example Excel sheets that I set up, where the data is drawn from, a little bit about the calculations on the Excel sheet, how they generate the prediction models, and a little bit about the models themselves, and with a brief discussion about how to trade them. So the Commitment of Traders is a report. It's Chicago Board of Trade. It was established in the middle 1800s, and it was basically to facilitate the marketing of grain. And then over the years, it metamorphed into a program that basically produces the number of contracts that are provided in each of these areas for the grains and the commodities, and it's expanded into the financial, so that it covers the Dow and the currencies and the notes, along with the bonds and gold, silver, other commodities. There's a whole host of things that it covers, and it basically lists the contracts, and it lists the contracts by group. And some of I think some of the contracts exist in two areas or multiple areas, but the ones that I use are focused. So if you want to find the Commitment of Traders report, you go to this the WWCDC government market reports, and you'll come to this heading page, and that's where I get started every week. The Commitment of Traders, the reports are released are done on Tuesday. They take the data from Tuesday, and between Tuesday and Friday is the day that they release it. So they assemble all that information, and it's quite a lot of information between Tuesday and Friday, and so they release it for the next week. So at the end of business day on Friday, the reports are published. What got me interested in the COT again was that I track on my market analysis that I do daily, sometimes a couple times a day, depending what I'm doing. But I like to track the Dow Jones and the S&P 500 and the VIX, oil, gold, silver, and the 10-year bond, because I think they're what the market, they show what the market's actually doing. And so when I started back, I thought, I wonder if I could create something that would, in the Commitment of Traders report, that would give me a kind of a preview what might be for the next week. And as I got back into the reports, I thought, well, I could list the contracts and the changes in those contracts and get a total on those contracts. And when I did that, I says, well, there's something I can do with that, I think, to make a prediction model. So before I get into the actual prediction model, I want to show you where I get the information. So as you come to the front page, this very first part is the commodities section. And on the report, I pick off of the commodities the interest and the change in that interest. So that if you were to go to pull up one of these reports, you would, for oil, I pick it off of the petroleum report, and for gold and silver, it's obviously off of the metals. And all the rest of it, the bonds and the Dow Jones and the S&P 500 and the Dow, they're off the financial report. So as you look at these reports, there's a specific place where I take each of the numbers that I put into my Excel sheet. For the petroleum and the metals, I use managed money, and it's on the disintegrated report. So when you go to that report, this is what that report is going to look like. If you click on it and bring it up, it's of course the short report I do for the commit for the oil, and I look down to, I find the physical oil, because that's what I want to see. What are the managed money people going to, what is their interest? And then it also shows what is the change of that interest in this. A little later on, I'll show you how I manipulate that to make a prediction model. I do the same thing for the financials, only I use the leverage money. And on the leverage money, I use approximately the same area. And the reason why I don't focus on the other two areas is that, one, if you go back to the commodities, one of them is a producer, the other one's the swap dealers. This is the people who are really interested in what their prediction models will be over maybe the next 2 weeks, and the others is assembly of others, which this is the most important one to my my research. It's the same thing for the leverage fund. Here you have the dealers, and you probably use it, but these people, the dealers and the asset managers, they're gonna have a longer term investment window, where the leverage dealers, they're doing things for right now, this next week, this month. And then you have the other non-reportables, and to make it simple, I just use the data, and I just put it into these columns. From that, and this is the only one that I'm going to show you, this is a little wacky, and it took me a little while to figure this one out. It just didn't roll off the tip of my tongue to figure out how to form this prediction model. But basically, I look at the difference between who's on long and who's on short, and what are the changes, and I use that information to say, what, who's moving more, and which direction are they moving, and how would that impact the overall prediction. And so on this side, I just made a simple formula. It's just, if it's weak, I don't really know, so I may go short, and if it's strong, I'm pretty sure that it's going to go long, or if it's strong going weak, I'm pretty sure it's going to go short. And then also on that, I put this BOW as the beginning of week. So I set this up on Sunday before the or just after the market opens, and I enter that. That's a hand entry for the beginning of a week, so that doesn't change. And then the the rest of the model works off of reports I already do. So it's an interrelated report that's downloaded out of Alveo. And so I won't get into that because that will throw a bugbear into this. But essentially, when I download the reports, it's either like at 6 in the morning or at the London close 9 o'clock or just before the changeover. And so all that information works together. So in this data part of the data sheet, I copy over the longs and the shorts. And what really makes this system work as a prediction model is that I rank the longs and the shorts and then the number of contracts, and I sum them, and then I re-rank the summing of them. And what happens then is that I have a basis now for doing a cross base entry for each of the currency pairs based on the price of each of the currencies, not currency pairs, the country's currencies, period. And that actually is calculated in my sheet, and it matches up with how it's actually calculated, or how it's actually established. So basically what I do is if the pair is a base, it gets the base, the number of the base. If the pair is a cross, it gets the number of the cross. As you know, in charting, if the number is a base and it's getting stronger, it's going down. And if the number is a cross and it's strong, it's going to go up. So what it does is it predicts in this column what it should do based on the information that I've garnered and organized out of the COT. This is the COT report calculation. And then basically I hand put in the beginning of the week, and then I actually hand put in the current price at that time. And what I do is, I'll bring this over. When I make when I start to do my downloading, I take 2 copies or 3 out of TradingView, and one I have an analysis of all the stuff that I look at, and then on the market report, and then I take the daily price, the current price in all the currencies that are on the apiary fund, and then so I enter that in, and then basically that calculates that differential, whether it's going up or down, and then it calculates whether it's going in the prediction. No, if it has a 1, it's going in the it's equaling its prediction. If it has a 0, it's not. And I convert the raw movement into positive numbers, so that then I can associate that with, on the next slide, whether or not how many are going up, and how far did they go up, and how many went down, and how far did they go down, and what that differential is what is the profit now of that of that look, whether it's a P&L of of the number of pips. So it's a tracking system, and it gives a whole number of all the pips that are been established in that movement up to that time, and the pips can go up and it can go down, based on it's just tracking actually how the currencies pairs are moving, and it also puts out what the prediction model predicted up and down. So that is pretty much how the COT report came about. And after I got the first 2 weeks in the middle of July on the COT report, I realized that, hey, I could do that same thing on some other models. That was a pretty good system to develop, a ranking system. I could probably do something in that same vein with the interest and inflation rate. So that's what I did. I created this is the whole COT report, what it looks like, except for the calculations that goes on over here. But then I came over and I made a second model based on the interest rate and the inflation models. And I put in the current interest rate and the current inflation rate, and I convert those to whole numbers. And then I do a differential between them. And I do that with in light of what's happening currently with their base currencies. And that gives me a model, then a ranking system that I use to distribute across the other pairs. And it's based on the ranking of whether it's a base or a cross, and then it does a prediction model, and it uses the same movement and tells me how well that's doing in the prediction model. Then I did the next thing is, well, I could join those two models. Well, this is a larger view of the interest. And I call it the I&I rate, and basically how that formulates. And basically that I create the two of them, create a sum, and then I rank it. And so that's how that prediction model is formed. Then I realized, well, I could put the two together. I could take the two ranks and sum them and create a prediction model for both of them together, and see whether it's stronger or weaker apart. And when I first did that, I thinking back to when I was with Steve in his summary of using the COT, he would go against the main direction of the COT, thinking that people are getting ready to change, and that was very successful. And so initially, when I was doing the COT report, I thought, well, maybe I'll do something similar. So I inverted the ranking, but I realized that was not right because it created some confusion between the COT and the I&I rate when you combine them. And so you would see a lot of times that the two combined would be less than the I&I rate. And I thought about that for a while, but I thought, well, what's going on there? And then so I had to go back to just a straight right off the ranking system. And so I made an adjustment on that at the end of August. This is a model. I said, well, if I can do that for the COT and the interest and inflation rate, why can't I do something that looks at the change in price from week to week? Because I'm looking at the changes that are happening on the in the commitment of traders report, and also on the interest and inflation rate. So I did a ranking system on just the change in price on the base currencies. And from that, I made a distribution system that went throughout the rest of the 28 pairs. And then I realized, and so it basically, it just, as the rank is, it throws it on one side or the other, and then it goes through the system and creates whatever it is. So then I realized, there is a price only system, because the pairs, they are base and cross, right? So you could just put each of the currencies in the base or the cross and create the same system as a pure system. And so what I had to do in order to get that to be realistic is I did a system where I looked at all the pairs and totaled them, created a percentage, and out of the percentage then went back through and created a number for each of the pairs, and then created and summed them, and then that created my my value, which I ranked and then distributed across the rest of the pairs. And sometimes that is just an amazing prediction model. I've seen that go through the roof, but it doesn't always. So in my market analysis, what I've done is I like to see them all on one sheet, so that I can figure out, well, what's moving and in which directions, and how do they look together in models. My personal feel, after seeing these over the term of the 9 weeks that I've been summing them up, is that the I&I rate is the strongest model. Here, I should have that up. Actually, I think I'll bring that up. Here is the 8 weeks that I've had experience with the with each of the models. Now, I didn't develop the price only model until September, so it's not shown here. And you can see that there's a lot of green, but there's also some pretty hefty reds in there. And so that tells me, there's no holy grail. You can get yourself tied into a week where something goes wrong, and it can be a pretty significant wrong. If you were to hold, take the trades at the beginning of the week and hold them through the end of the week, which I did a couple of times as in the middle of August. And fortunately, the weeks that I took them, they were good weeks. But I would highly recommend against doing that, because there are such huge swings. There can be such huge swings during the week. So what I see, and when I look at the model, how would I use that information? Well, I think David alluded to it on Monday or yeah, I think it was Monday, that there's points when you're working your way into a trade, and you're trying to get into a ride the wave or a situation where you can secure your trades and let them run. And I think the COT report, that model can give you a sense for which is the main direction for that currency pair, given its past performance. And I should bring up another model that I use. Well, I have it down below, but I have a chart that I have on TradingView that's specifically for the COT, and it's a long range chart. It's just where's it been, where is it likely to go? Is it, does it look like it has? Is it in line with the prediction models that I'm producing out of the commitment of traders report and the I&I rate? And if so, then I go back and I look to see, has it broken structure on a lower time frame? Is it in the same direction? And I look, I've created another sheet that tracks all of the pairs, whether they went up or down, whether they were successful or unsuccessful. And then I can go back and I can look at it and I can see exactly what each pair did. And so then I can say to myself, well, is that worth taking? Does it produce enough over a week, over a time period? Does it have enough volatility and momentum to give me a good trade? And so that's the way I use the information currently. So that's pretty much it. It's a ranking system that looks at specific information released in the commitment of traders report in terms of number of contracts and the changes in the contracts. It also looks at the differential between the interest rate and the inflation rate, and it creates a ranking system. Or it looks at, or combines the two of those, or it looks at the differential from week to week in moving in price, or it looks at just price to price based on, what all the currencies within that pair have done in relationship to that pair in a percentage converted to a ranking system. That's what it is. And I hope I haven't bored everybody to tears, but if you were thinking that this was going to be the Holy Grail, be careful of the Holy Grail, because it can be really unprofitable.
So what you're saying is that trading is hard. And there's no one easy solution.
Yeah, well, price changes and moves up and down during the week, but in general, it will, the prediction model predicts where it's going during that week at around 60% level, but it's not, and that's 60% level over 28 pairs is what? You got 18 pairs that maybe work for you, and you got 12 that didn't, or 10 that didn't, and exactly. So selecting which ones, and it doesn't replace intelligent trading, which is what you're teaching, David. So I think I've knocked everybody out of the room. So
like Glenn says, this is awesome. Can you start again now?
I hope it was clear.
Does anybody have any questions for Joseph? If anybody has any questions from Joseph,
I just think it's awesome, Joseph, that you spend all this time doing all those Excel spreadsheets, because when I quit my big job, I said, I'm never doing Excel again. But do you use this when you trade, or do you just go look at a chart? How do you correlate the two?
No, I trade off of it. But
Do you really?
yeah, I, what it does, it actually gives me a long-term bias, a weekly bias. So but you can see that in a long-term chart. What it does
Okay.
is it gives me numbers. And being an engineer, I always like looking at numbers. That
Oh,
gives me a sense of what that value is. When you
Okay.
look at a chart, yeah, you see size and you see direction, and you can figure out what the numbers are by using your tools and measuring. You can find what your pi cycles are, and what David is teaching is really an important aspect of trading, whether you're trading on a long-term basis, and this is a long-term basis. It's a trend following system because it's telling you where the trend is for that currency pair through.
And the predictive analysis because it's in a trend.
Well, it well, you can see if it's not going somewhere because it'll report the same thing. It'll have, at the end of the week, it won't move. It'll just
Oh,
have a number
okay.
by it, you know,
Okay.
and it could, if it, the one thing I think that this would probably confuse people is they think that, you look, the differential here, you think that, and you get these numbers, you got 15 and 13, it's about half, but you don't know what it doesn't say is which ones move more unless you come down and see them, over here and put a
Do
sheet
you
down.
trade? I have chosen to specialize in the EU. Do you specialize in one, or do you trade any or all of these based
Well,
off of this chart?
I my when I look at all the major pairs. Now I trade mostly uh, mostly the EU and Japani, when I have time to trade.
Okay. But you trade
Um,
whatever's moving. Is that right?
well, yeah, I only have so much time to do this, and that my interest really is in the analysis. So
Okay.
then I try to trade and learn. I'm not probably as good a trader as you, because I don't spend all the time that I should learning the ins and outs of what David is teaching, but I try to keep up, and I try to do as well as I can, and at times I pick up stuff, and I'm successful
Mm-hmm.
for a time, but I wouldn't I'm not a professional level trader yet. I'm just someone in the group
Well, yeah,
that's
neither am
interested
I.
in.
You're too kind, Joseph. Neither am I. You and I started trading at the same time in apiary, so we're on the same journey. We're on the
Yeah,
same
yeah.
cycle. But the thing is that what I really find fascinating in the numbers is how relevant they are to our experience trading. And I don't go deep in the numbers, and yet they do still reveal like a story, right?
Oh, they do. Let me just for a second, and I know that my market report people, they gloss over when they see it, and I'm sorry about that. But for me, just to share this with you for the moment, when I go when I go through when I go through when I get to see this, all those numbers are right there. I look at each individual pair and I can tell, what the range is for the last 5 hours and the 4 hours before that. I can see the variation over that time period. I can see the average move, I can see the max move
Yeah.
and the average, and I can correlate that to you know, how many trades were in that and where it was weak or sell or strong, and then I can go back over and take well, these are the base charts. I see them all in one, but I have a chart here. I can come down and tells me all the total pips that were in this move. And I, you know, not only I see the start to end, but whether it was above or below the line, and whether which are traveling together and which aren't. And you know, it just tells me what's going on. So for me, it's a snapshot. I come by and I can see what the DXY is doing with all of these other pairs, and I come down and you know, I got what the market is doing and whether it's going up or down and what the bond rate is on each of those. And to me, it's just a flash. That's all I need to see it. And then I'm done. You know, I'm ready to trade.
So Joseph, you may have I'm just going to read a question from chat. You may have already answered some of these. So if you did, just say you did. But Glenn asked the question, can you tell us how you trade from it? When do you enter? What time frame? Where do you suggest you put your stops and take profit? Do you do a long-term wobble into a position? Harmonizing with predictions. Does the process reveal anything about reversal? So if you've answered any of those questions, I just want to make sure that we're getting questions to you.
Yeah. No. When I look at stuff like this, I know. Well, when I look here on a chart, I know what the price cycle is. I'll look at here. I can tell you what that price cycle is because it's listed over here. So, but that's in the past. You know, that's what the market was doing when I entered. So, you know, it probably takes me a half hour to do this, you know, because mainly because I put the cot in here. And so I have a lot of hand entry with the cot. Otherwise I wouldn't. It'd be 10 minutes and I was done and out. But when I developed this model, I messed it up because I made it integral. And then I had that hand stuff, which is nuts. But in terms of trading with it, yes, I use it in terms of understanding what the market. It's a clearer picture of what the market is doing. But you do that. You trend, bias, and price cycle. You cover that. And so, do you need this information to trade daily? No. You don't use it in that way. But I see it every week, every day. So when something is crazy, I know
you have an explanation for it.
That's
I know
really
crazy.
Fascinating.
You know,
that
when something's way out of whack.
What did you think about today?
Huh?
With what went on today, did you see a correlation in your model with? Because I thought everything was crazy today.
Well, it was crazy for me because I got up, I got on the site and my copy trader didn't work, and I had it all set up the night before, and I closed it down and opened up, and one wouldn't copy, so I spent an hour trying to get the copy trader to work, and then I got in just as it took off in the wrong direction, and then my copy trader stopped working, and then I'm trying to save myself in a losing situation. And I got to the top and I was, you know, trying to make some of that back. And then if I had just left the ones at the top, like David was saying, it came back. You know, I was in with enough.
If only we had the crystal ball. Is this the crystal ball?
Yeah, this is a crystal ball. I tell you, you know, when you get up and, you know, your day isn't working for you, don't trade. That's the crystal ball.
Just trade in your sleep, right?
Yeah.
Just
Just go
set
back
your
to
trades
bed.
up for overnight so that you don't mess them up by trading them.
Hey, David, you laugh, but I do that. I like
Right.
dream trading, and then I wake up and I'm like, oh, I didn't really put that in.
You're like,
I,
whoops.
I love what David's teaching. I love trading that way because it's really successful. And if I don't get, hung up somewhere in the process, it works. And it's happened
Good
enough
thing, yeah.
that I don't need to question that. That's a done deal because I've had enough experience. I've seen enough other people. That works. But, you can't argue with
Okay,
it.
so
I
based on your
appreciate.
model, next week, what do you think is going to happen with the euro? Is it going to go up or down?
Everybody go to Vegas. Hurry, quick. And what Joseph is going to say.
Yeah, put your money. Well, I can. The one thing I stopped sharing it because there is a lot of hand entry, and it's really easy to make a mistake. And I thought at certain points, if there's too much hand entry to share,
Sure. I get that.
it's not. It's
Yeah, it's a lot. Oh, this is a lot.
So if
So-
you are a trader that needs to know everything about everything, Joseph is that trader, right? And if you're a trader that is very analytical, Joseph is that trader. And so I think we all can just see the massive amount of energy and effort that you put into cultivating and creating this, right? And I think that for some of us, myself included, it's overwhelming to the point where, oh my goodness, this is a lot of information. Where do I begin? How do I even start? How do I even sift through it? But thankfully, I have Joseph that loves to do that, geeks out on this kind of stuff. And so if I ever have a question, I'm like, hey Joseph, what do you think about this? And he'll or if I don't say something, if I say something that just piques his interest, he'll go down a train and tell us what the percentage of like the last time you did that. I just mentioned something in passing in the trading room, and I'm like, I don't really know the percentage. And Joseph just goes, well, let me think on that and I'll get it back to you. But if you're the type of trader that needs to know, this is very, very valuable information for you, and can give you more confidence in your trading, right? And I think that at the end of the day, whatever helps build confidence is a good thing. Whatever helps to build confidence in your trading is a good thing, because we've all been smacked around by the market too many times, and we need to find those confidence seeking abilities. So
I like to put a little plug in. Yesterday or last night, I put in a scalper's a ratio that just came to me yesterday, and I started thinking about that scalper's ratio, how it's actually more representative of a scalper than the Sharpe ratio, because the Sharpe ratio is really meant for investment, but uses a free rate of exchange what investment would be if it were in a fund that was protected and wouldn't pretty much wouldn't lose, was real stable. But that's not what a scalper experiences. What a scalper experiences is they have losses against wins, and those wins have distances and numbers. And so the scalpers ratio uses that same thing, and it puts it in terms of what the scalper is doing. And so I'm going to work on that a little bit more, but I think that as a ratio should tell a trade manager a lot more about how well that scalper is doing than the Sharpe ratio.
The Sharpe ratio. I can see that.
Yeah.
Well, I'd certainly appreciate the time, energy, and effort that you did for the community. I'm whether or not people are going to be able to sink in on the first round or are going to have to watch it again, that's to be determined. But I know that you put in a ton of energy and time in calculating all this. And so for that,
Yeah.
I not only applaud
Mr.
you, but I thank
Bondsbody
you.
has made his own, and we've talked about it. I explained to him what I was doing, and he's got a very successful process going, and he trades off of it. And he
That's
shows me his
awesome.
results week to week. They're pretty
Well,
impressive.
that's the one thing I love about the community is that everybody's willing to help everybody. So, and this is exactly what you're doing tonight. And like you said, you're not a professional instructor. You're not. You're just somebody, a member of the community that feels like they have, that definitely has value, that feels like they have a voice and wants to share that. And so I appreciate that, Joseph. I appreciate everybody that's been
Thank
here
you.
tonight. So I thank you guys. If we could, thank you, Joseph, again for the time and energy that you put into putting this together. And I think we'll go ahead and close it here.
Okay.
And we'll jump over to hot seat trading. For those of you guys in the hot seat, we'll get into some overnight trades, and I'll start to teach you guys a little bit on what I do to hit some successful overnight trades like last night. Last night was a good night for me. So thank you guys,
no
and
kidding.
Awesome.
Okay.
we'll see you
Yeah.
guys
All right,
in the
well-
morning in the live trade room.
Thank
What's that?
you.
Thanks,
Joseph.
Thank
Joseph.
you.
Yep.
Thanks, Joseph. Appreciate it.
All right.